Hey folks, Rachana Ranade here and I welcome you all to yet another shoot and release video. Everyone knows that really you have to check the pinned comment for any fumbles if they happen. You might be like, what's wrong with you, Rachana? Why are you doing so many shoot and release videos? The reason is simple. We had a nice Diwali break and post that, my edit team is busy with something and something with what? Some surprises are lined up. You'll get to know about that in the next week maybe, right? So let's get started immediately right away. Let's understand about some basics of Swiggy IPO. So next 10 to 12 minutes, 100% attention, right? Swiggy, everyone knows, founded in 2014. Their intent was mainly to make an easy to use platform. And they wanted to have a single app for multiple things. I'm sure everyone has ordered at least once through Swiggy. You might have used Swiggy Instamart, which is for quick commerce. You might have used Swiggy Genie, which is like a comparison for Dunzo. And they also have their dine out related, okay, I'll go to that also. Dine out also they have enabled on their platform. There is also something like a step in out, which is like for event bookings. They also have some hyper local commerce activities through Swiggy Minis. They have a membership program called Swiggy One, which is mainly for discounts and offers. They also have a digital wallet, which is called as Swiggy Money, and they have also tied up with HDFC Bank for a credit card, which is co-branded credit card for some additional benefits. So I'm sure everyone knows about the business model. Let's move on with the industry analysis first. Then we'll talk about the financials. We'll also understand the risks and the valuation part as well. So moving on with industry analysis, you will see that overall India's position in 2023, if I were to compare that with China, we are way behind them. Be it access to internet, which is at 58% right now, China is at 75%. Smartphone users, we are at 47%, China is at 73%. Online commerce users, we are at 17%, China at 60%. We are way below China, but then to what extent can we grow up to 2028? From 58%, we can grow to 70 to 73%. From 47%, we can grow to 64 to 67%. And from 17%, we are expected to grow to 21 to 23%. Now talking about the, again, overall, again a very interesting point. The interesting point is that whenever we are talking about online shopping, okay, it has been observed that electronics is more penetrated as a segment as compared to food delivery. Now, why am I saying that? Electronics online penetration is around 22%, fashion is around 18%, and food is just 11%, right? So is there a headroom left? Clearly, even though if I'm talking about current penetration, answer is yes. Food is only at 11%, electronics is double up at 22%. Now this entire online food delivery market grew at 42% CAGR from 2018 to 2023 and is expected to grow at a CAGR of 17 to 22% from 2023 to 2028. Now, the point that I made here, right, that food online penetration is just 11% as compared to 22% in electronics, and is there a reason for that? Answer is obviously yes. In India, we still give a lot of preference to home cooked food, and with more and more awareness about health, I'm sure more and more people may also still give a little bit more preference to home cooked food. It's not India is not a place where we can just go all out for dining out. So we are definitely behind as compared to US and China, which is good. Not good for Swiggy and Zomato though, health wise I'm saying. But India may food services market, it's penetrated around 9 to 12% of the total food consumption. Now what do I mean by this? Just to give you a simple understanding of this, let's say out of 100 meals, 9 to 12 meals are either ordered online or people would go out to have them. Okay, if I compare this with USA, for per 100 meals, it will be around 55 to 60% which are outside. Either people would go out or order, and in China it will be around 37 to 42. So obviously we have our percentage is way less as compared to US and China. If I were to also understand about monthly online food delivery frequency, so again to simplify, in a month, how many Indians would order from outside? What is that number? How many times would we order food from outside? We would order around 3 to 5 times a month. Okay, China is 5 to 10 orders per month, and USA is 8 to 10 orders per month. This is online food deliveries I'm talking about. Okay, so this is about industry analysis. Expected to grow, agreed. As compared to US and China, we are way behind, agreed. So now with that, let's come to financials. If you understand the overall revenue, that is in an increasing trend. Average monthly transacting users are also in an increasing trend. Average monthly transacting delivery partners are also in an increasing trend. Now, why is this important? Because they would engage with more and more delivery partners if the demand is high. So an increase in an increase in delivery partners means that the demand is rising up, right? Then the platform frequency is also increasing. See, I'm not reading out the numbers are there in front of the screen. I'm just telling you the trend, right? Now, let us also understand one important metric, which is AOV, which is the average order value, which has increased from 407 to 428, and if I'm talking about the 3 months data, that is 436. Now, why did I say call out the numbers here? I wanted to make you understand the importance of this number. What does this mean? It means that if a person were to place an order on Swiggy, on an average, that person's bill total amount would be around 436. So, obviously, the interpretation is higher, the better, right? Gross revenue is also in an increasing trend. Contribution margin as a percentage of GOV is in an increasing trend. If I'm talking about adjusted EBITDA, which is absolutely in losses, from 1,400 million, it has gone down to 14,000 million. From 14,000 million losses, they have come down to 471 million losses. This is as at 31st March 2024. And if I'm talking about the 3-month ended data, they have come in profits for the very first time at EBITDA level, at adjusted EBITDA level. But again, obviously nothing to jump about, because this is just the first time that they have come into positive figure at adjusted EBITDA. Would love to see such numbers coming up for 1 or 2 more quarters, so that we can understand that this is sustainable as well, right? Overall, average monthly transacting users are also increasing. Average monthly transacting restaurant partners are increasing. So, other matrices are good. The problem is with the losses. And where can we see that? That is the first point in key risks. Since inception, they have been in losses every single year. And not only losses, even in negative cash flow. So, if you can see here, this is the loss for the period figure that has been, they have been in losses at the PAT level basically every single year. Even if you are talking about net cash used in operations, so operating cash activities also in losses. Are the losses decreasing? Answer is yes, but they are very much there, right? Second is intense competition. Everyone understands for Swiggy, major competitor is Zomato, be it food delivery, be it out of home consumption, be it quick commerce, Blinkit. Here the competition is much more intense through Zepto, Big Basket now. The third key risk blew off my mind. The attrition rate, look at that. It has increased from 37% to 50% to 53%. It means that out of 100 people who are there in the organization, 53% are leaving that organization. Definitely not a good sign. It's a rule of thumb is that the attrition rate, if it is about 20%, the owner of the organization, the top level management should look into it. If it's 53%, it's sky high, right? Pending litigations, yes, some pending litigations against the company. It's approximately 3.22% of the gross revenue, so nothing to worry a lot about. Peer comparison if you see, Zomato is better in almost all the aspects. See, I can't do something like an EPS because anyways Swiggy is still in losses. Even PE is again tricky because they are in losses. So, there is no, I don't think a negative EPS comparison even makes sense. Here in the RHP they have given Zomato is at 634, but if you check out on screener right now, you will understand that it is around 287 for Zomato. We can't have PE for Swiggy, but if I'm talking about the price to sales multiple, for Zomato it is 13.4, whereas for Swiggy it is 7.76. So, thankfully they have placed it lower as compared to Swiggy, because if I were to understand about the revenues, if I were to understand about the profitability, even if I were to understand the overall market cap post IPO, Zomato would be around 2.22 lakh crores. Swiggy would, at the upper price band end, they would be around 87,000 crores. So, good that they have kept the price to sales valuation at a little bit lower end. What are they going to do with this money? How much money is also important. Total, they are going to raise 11,000 plus crores. 4,500 crores roughly is a fresh issue. Balance, a bigger chunk is offer for sale. Out of the fresh issue, what are they going to do? They are going to use some money for repayment of borrowings. This is about Scootsie, which is one of their material subsidiaries. For Scootsie, again, one more point is that they are going to use this money for expansion of their dark store network. I am sure everyone knows what's a dark store. They're also going to use this for lease and license payments for their dark stores. For cloud infrastructure, they are going to use this money for brand marketing, business promotion expenses, and also to fund their inorganic growth. But they have mentioned that these are the unidentified acquisitions as on date. When does the IPO open? IPO opens on the 6th, closes on the 8th. Listing date is expected on 13th of November. This is the price band 371 to 390, and minimum retail application is 14,820. So, all in all, what did you feel? Are you excited about this or not? Do let me know in the comment section. I hope you enjoyed this one. If you did, please don't forget to smash the like button. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye.